Yo guys, welcome to today's video. So today we are going to do course breakdown. By course breakdown, I mean we are going to show you guys my thought processes towards trading. So number one, the first thing that I want to do is to look at trend. What is trend? Trend is the movement of price. If price is making consistent, don't worry about how my laptop is behaving. If price is making consistent lows and highs, lows, highs, lows, highs, lows, highs, low, we are in a downtrend. And if price starts pushing above the highs and correcting to them, making a higher high, higher low, higher high, higher low, this laptop is misbehaving. Okay, higher low, higher high, higher low, higher high. We are in a bullish trend in this case. So, what are you supposed to look at when you enter into the market? The first thing you're supposed to look at is you're supposed to look at trend in 4 hour and 1 hour. Alignment must be there for execution. Do you understand that? Alignment must be there for execution, which means the 4 and the 1 hour time frame need to be fucking aligned for price to be able to, not for price, for you to be able to execute a trade. Now, the second thing that I want to talk about while trading, the second thing that you need to look at is levels. What are levels? Levels are areas where buyers and sellers are seated. So, this is a level and this is a level. But there's an ultimate big difference with those two levels. At the low, we have buyers, and at the high, we have sellers. So if you understand this concept of buyers and sellers, you'll even understand trends. I normally used to say that, not I normally, even right now, I say that if you can spot levels into bracket significant, I'm going to explain that a little bit. You understand, you understand what? You understand trends. That is very, very, very important. If you can understand, if you can spot levels, significant levels, you understand trends. Not trend, not trends, they trend. Sorry for that. I'm sorry for that, guys, man. You understand the trend. Okay, so in this situation we are going to delete everything. Let's delete everything, and we are going to do a full-blown analysis on gold. So the first thing you want to notice is the highs. So the highs are the levels where we have sellers. So as you can clearly see, we have sellers at that area, we have sellers at that area, we have sellers at that area, we have sellers at this area too, we have sellers at this area, we have sellers at this area, we have sellers at this area, that area again, Now price has eventually reached a final level of sellers. So what do you expect price to do from now? Price, the next thing we are looking at is buyers, where buyers are situated. Now look at this level there's buyers, at this level there's buyers. This is a complete direct market. You can clearly see that buyers are fewer than the amount of sellers. We have buyers again, we have buyers again, we have buyers again, and we have buyers again. I know that we can clearly see that buyers are being squeezed out of the market, but they have been extremely powerful at this level. Now, you already have an idea of what the trend is in the 1 hour time frame. Now you can we go to the four, but you are supposed to start with the 4 hour. I don't know why I've confused. You're supposed to start with the 4 hour time frame so that you can go down into the 1 hour time frame. So what did I mean by significant levels? Significant levels are levels that you can clearly see in both time frames. So if you delete this, you can clearly see the following level of sellers. This is the first level of sellers that is clear to see, very clear. Also this, I'll call it for now the all months high, and you have this level around here, very clear to see. We have this combined level, these two combined levels, very significant, extremely clear to see. Now these were the last level of sellers in the 4 time frame that are clear to see. These levels are so important because they give you two things. They give you places to put stop loss, and they give you places to to consider market shift when price breaks above that area. So in this situation, I know if price breaks above 472 4.65, we are extremely bullish. But if it maintains structure beneath that level, we are continuously bearish. You need to understand that levels that are significant are levels that can easily be seen in the 4 hour and 1 hour time frame. This is a significant level, and you can clearly see yesterday we had an indication, correction, and a continuation. Now the buyers, these buyers, this we have buyers, we have buyers. Look at that, buyers. So we want to see how price is reacting when it reaches a level of buyers. This is the last level of buyers. Now let me delete that. The reason as to why I've placed an alert at this area, guys, please do not incorporate the daily time frame in your strategy. Please do not, until you become so professional at your job like I am a professional trader to be able to notice these things. In the daily time frame 2 weeks ago, on a Monday vlog, on a Monday market analysis, I showed you guys something. I told you guys that here we have buyers and price is going in a correction. Reason being, as I said yesterday, it's because when you look at this correction, this you'll just know price that the price is correcting when you look at the type of bullish trend in quotes that is given you. If you look at this, you'll notice something. Price is squeezing itself. If you look at this, price is not squeezing itself, but rather it's attacking. So I clearly knew that this is a clean correction that price is creating, and I said that we'll be expecting sales beneath the same level which I've placed my alert. So as of now, guys, you have understand two things. You have understand trends, which is important, and the second thing you have managed to understand is levels, which is the blood life of the market. Now we look at this market again. So if you clearly look at this price, you'll notice something. You notice that at that level where I'm anticipating to take my sales, it is very clear that the daily time frame has managed um, to put a significant level of buyers. So what I'm waiting is to see price break down beneath this level Obviously, in the lower time frame, in the 1 hour time frame, if price breaks beneath that level, if price breaks beneath this level, we'll see a little correction, then price is going to pop to the downside. Now, in the 4 hour time frame, in the 1 hour time frame, we know our level of sellers. We know that this is the level of sellers. That is where we're supposed to place your stop loss. And also we can clearly see that this is another level in the making. Now this level is a significant level, though it's not the 1 hour time frame, but it price is least likely to correct above that level. The reason being, I'm assuming that it is from that level of sellers that we're going to see price break down, break beneath this significant low, this significant level of buyers to give us a correction, then continue to the downside. So, guys, my job here is to wait. I'll wait. I'm not executing any trade until 4 p.m., not 4 p.m. until New York session. So that is how I trade. Now, after I've managed to mark trends and through understanding levels, the third thing I look at is this strategy by trades by side go look up a team known as ICC. So the concept is very simple. When price makes a level and buyers pump price back up, sellers will always break price beneath that level. Then buyers are always going to push price back to where they were and beneath and above, a little bit above. Then um fucking hell. Then sellers are going to sell together with buyers to maintain the movement of price. That is the concept behind ICC. So the I is the indication, which is this part. The C is the correction, which is this part. And the next C is the continuation, which is price movement beneath the level. Now we want to strike the market, we want to execute sales in this market when price pushes beneath 4658, which means that we'll be placing that stop there, that trade there, stop loss there, and then take profit target. I'll be targeting low the low in the daily time frame. The low in the daily time frame this is the lowest place also in the 1 hour time frame. It's around here. That will be our target. Yeah, I think gold is going to sell heavily, which means you are going to see um we are going to see Nasdaq push powerfully. Also, we are going to see, I think if Nasdaq is buying, oil needs to be selling. Yeah, but the best stop loss is around there. But for now, we are just going to wait and see. So that is the trade. Now in this situation, we'll wait for the continuation, high, then correct correction, then continuation. Now after that, I need to consider another thing, which is risk to reward ratio. What is risk to reward ratio? Let me show you. Risk to reward ratio is this 3.66. You want to execute a trade with a high risk to reward ratio that is above 0.99, that is above 1:1. So risk to reward ratio is the third thing. The fourth thing is the amount that I'm willing to risk in this trade, the percentage amount. You need to see your trades in terms of percentages. So for example, in this trade, I'll be willing to risk 1%. So 1%, that 1% needs to be the amount from the entry to the stop. And you need to have a clear view on what you are going to make from that 1%. So in this situation, if I risk one, I'm going to make four, which means if I risk $1,000, I'm making $4,000. If I risk $10,000, I'm making $40,000. That is trading for you guys. This was just a beginner course. Tomorrow I'll be talking about trends in depth, then levels, then we're going to do that until we finish the whole course. Thank you guys. May God bless you. Amen.